Drescher is co-founder of EAGx, whose focus is on creating markets for public goods. They have an MSc in computer science and have been working as a software engineer since 2010 and have an interest in animal rights and existential and suffering risks. John will be talking about impact markets for grant making at scale. Thank you, John.
Thank you. Right, so I'll give you like a very brief overview of what we're doing at EAGx when it comes to impact markets. And the broad goal with impact markets is that we want to help budding researchers that are just trying to break into a field get funding that way. That we want to make it easier for funders to find these good funding opportunities, and that we want to enlist for-profit researchers in the search for funding opportunities. Now, what is an impact market? So just to give you a very brief overview, I think an impact market is most easily explained in analogy with a prize contest. It's like a kind of prize contest, I would say. So first there is a philanthropic funder. This is the sort of funder that wants to make research happen. And this funder, instead of like prospectively, as we call it, funding proposals that people submit to this funder instead promises a prize pool to anyone who successfully solves this problem, and or like makes a contribution to the problem, doesn't have to be fully solved. And like for example, $1 million for someone who like improves our understanding of some problem, or like a prize pool that gets split up among people who make some contributions. Then there are like the issuers, or sometimes referred to as the founders, or in our case the researchers. And these people then want to realize their projects, but to do that they need to first seek some seed funding in order to be able to realize them, to like pay their rent or something. And now in our example, there is like some team of researchers that needs a bit of money for like the compute for their like AI safety experiment or something, and for coffee and rent. And this is where the profit-oriented investors come in. So what the researchers do in order to fundraise on our market is that they create something that we call an impact certificate, and then they sell shares in this impact certificate to these for-profit investors. And the for-profit investors try to pick out the sort of projects that they think are most likely to receive the prize money in the end from the funder. And if a project does receive the prize money, if they get lucky with their pick, or like maybe a skill, then the prize money can be sized in such a way that they can make a profit in expectation of this prize money, or of like their share in the prize money. So there's like this broad overview. Just to summarize, early on with this funder is mostly inert. The funder is just like, if you solve some problem, here's some money, but they don't interact with anyone directly, apart from like this broadcast. Then there is this abstract project, and this project has contributors. Among others, there are the researchers that contribute like their time, knowledge, work to that, and there are the investors that contribute money and perhaps some infrastructure to it. And then with some low probability, oftentimes from the perspective of the funders, will be like some 10% or so, because of the like general baseline for hits-based giving. The project will be successful according to like some measure of success, and then the funder will reward any contributors to the project, and the money will flow back to the researchers and to the investors. This will usually take the shape of the funder offering to buy shares in this impact certificate from these parties at some price. So yeah, but why would we do that? What benefits does this have? Essentially for the researchers, they have much better access to funding, and this is, I think, particularly important for researchers who are like relatively far away from EA hubs, or they're trying some speculative new approach to solving some problem. Maybe they live in some distant country that doesn't have a lot of EA presence yet, or like are not like in the social circles of the EA funders. And because there are so many more like for-profit investors, they could be like VCs, or they could be like just friends that have a bit more money and are like willing to pay the rent for a bit. Because of that, they are much more likely to have access to some for-profit investor than they have access to some big EA funder of their research. These VCs and other investors, if there are some sufficiently professional investors, usually also have like a network and other infrastructure that's useful for researchers, and that can also be beneficial for them. Then for funders, it enables them to scale their grant making a lot. First of all, they can draw on this vast network of for-profit investors in order to find more funding opportunities, and like leverage that network to some extent. But they can also at the same time cut their time cost a lot, and to some extent their monetary cost, because they're only evaluating the successful project as opposed to all projects. And then for the investors, of course, if they are purely profit-oriented investors, it will only be like the profit bottom line that is interesting to them, so like the expected profit that they can make of this. But if they're impact investors, currently lots of impact investors have the problem that when they are limiting their investment vehicles to only the ones that are profitable, they're usually relatively low impact. And this way they could have a profitable investment that is at the same time almost maximally impactful by like EA standards. So what challenges have we run into so far? First of all, there is a bit of a measurement challenge. We want to know like how much impact we're really producing over some like prospective funding counterfactual. So in some cases it could be that someone participates in an impact market with some project, but they would have realized this project anyway from like their own funding. In other cases, it could be that there is like an impact market for like particular outcomes, but actually someone would have worked on something else that is more impactful, more important, but they don't get money for that, so they switch to whatever gets money on the impact market, and that will create a negative impact. So we want to address these things by like allowing people to submit their ideas to ongoing prize contests, so that they don't have to switch away to like less impactful things. We want to like track this with like, we have some experimental designs in mind, but like more realistically we'll probably start out with qualitative surveys and track the impact that way. Then it's possible that people might abuse these markets in various fashions. So we have like this long article on this. The article can be found on the EA forum and also on our Substack. That's like impactmarkets.substack.com. It's also linked from our website, impactmarkets.io. In this article, we go in depth on like all the various risks that we see with impact markets and how we hope to mitigate them. And like key pillars of our mitigation strategy are like KYC, which stands for Know Your Customer. So we want to know who the people are who use the impact market, so that if someone behaves like abusively on the impact market, we can effectively ban them and they can't just create a new account. Generally curation of all the content on the impact market, so that if like someone puts up a project that is like excessively risky, we can also remove it and like ask the person to do that or maybe ban them. Then in the longer term, we want to introduce like proper shorting of impact certificates, so that you can hold short positions where you make a profit when the price of an impact certificate drops. That's not realistic at the moment, but we have like expose certificates where also people can make a profit, can get like a bounty paid out to them through the impact market if they find out that some impact certificate has like somehow gotten through our creation process. And finally, we want to establish pro-social norms on the impact market, where we also draw on the retro funders, on like the people who provide the prizes in the end, to provide the incentives to adhere to the norms that we try to establish. Like in the third category, there are like legal challenges when it comes to like securities law in particular, and we want to mitigate those through accreditation checks, so that anyone who wants to be investor on these markets has to, at least for now, be an accredited investor, so that this whole thing can be like a private market. and like the impact certificates don't count as publicly traded securities. And in the longer term, we have the idea of using a non-profit think tank as an intermediary that like does all the trading and then just pays researchers as contractors to actually carry out the research. So basically sort of a decentralized kind of think tank type of non-profit. But like this is probably not in the short term anyway. So our short-term bottlenecks are that we would be really interested in talking to experienced grant makers to find out what their pain points are, what their bottlenecks are, what sort of software they envision, what sort of features they need, so that we can build exactly the sort of software that like solves their problems. We've talked to Scott Alexander, for example, briefly, and he immediately mentioned like some key pain points that are important to him, and for like the next AstroCodex 10 grant round. And this is the sort of feedback that we're very interested in. So like if you're one of those grant makers or you have contacts with grant makers, then we're quite interested in like your advice on this. And then we're interested in I'm a software engineer, but I'm not like a UX UI designer, and we need more support in the software engineering department. So it would be really great if like anyone wants to help us build this software. And we're using like TypeScript and React. It's all fully typed, so it's very pleasant to work with, I think. So yeah, if anyone wants to help us with the design or with the implementation of this marketplace, that'd be great. And yeah, just the final slide on like who has already like indicated interest in using something like this, not necessarily our platform, but like some sort of impact market. Protocol Labs are one of these groups. They're building their own impact market. It's also a very interesting project that we might want to build upon at some point. There is Manifold. They're planning something that they call Manifund, but like most likely in the short run, they'll provide impact. They'll provide like prediction markets for us. That we can use for like risk mitigation and various other purposes, may be very useful. And then, as I mentioned, like we've talked to Scott Alexander, and he's sort of tentatively interested in maybe using an impact market or maybe our impact market for the next AstroCodex 10 grant run. That would be pretty great. And yeah, there are a few others that are also generally interested in this concept. Yeah, thank you. I'd like to quickly again mention like impact markets where you can find out more, because like this talk is a bit compressed, and our Substack impactmarkets.substack.com. Thank you.
So once again, feel free to ask questions in the chat or directly to John.
I'm not sure if I understand entirely the first time. It sounds like a very cool system. Is the price money also regulated by some kind of market mechanism, or is it just the purchase certificate itself? So there's nobody participating in the project with price money on that will go up, or if there's a lot of impact certificates, will it go down?
The way this currently works is that like some funder in the last grant round that we did, this was just us, says we have $10,000, person asking $10,000 budgeted for this prize contest, and we want to reward anyone for like the contributions they made to like various problems. But then in the second step, we look at these actual contributions, and what then happens in our lines is sort of a bit of an auction process, where we're like, okay, we could have gotten this problem or the solution realized in some other fashion, like prospectively, for example. We could have gone through all the work that it takes to like hire the contractors and so on to like realize this work, and we can imagine like some sort of estimate of how expensive this would have been. So we definitely don't want to pay more in reward than we would have like otherwise paid with traditional methods. So we try to size the prize money in such a way that ideally we even save money, or at least pay the same that we otherwise would, and then just have like time savings that way. And I imagine this is also what other funders will do in the long run. But then again, there's the dynamic where like several funders can be interested in the same outcomes, and then all of them can fund them. So if one of them is like interested in paying like $100,000 for something, then the founders or the researchers may even refuse that or not sell all of their shares to this funder because they expect that this is like lowballing it, and there might be another funder that bids like 200,000 or something for the same impact. So these sort of market dynamics could also come to play.
So like you talked about how to like rule out people who are doing things that are risky or like could do harm. But like some projects are, like, they have some potential to do harm, but like a lot more potential to do good. Some risks are quite common. Like having some ideas on how to like mitigate, how to incentivize people to mitigate those risks while still doing projects.
Yeah, like the same incentive mechanisms that.
So you would punish people for doing risky stuff.
That is one idea. It's a bit difficult. So when it comes to punishment, we have collateral in mind. So you could be required to deposit collateral if you want to realize a project on our marketplace, or insurances where you're required to pay for an insurance that again has the same function as collateral that pays out if the moderation team, which has to be sort of a trusted moderation team, decides that an impact certificate was too risky, and then like this punishment would come into play. But like by and large, the same mechanisms, like these norms that we've established, work the way that the retro funder says we're only going to fund things that adhere to those norms, and in particular where the gains from moral traits are like if something is harmful, it's usually harmful for someone. So if you realize something good, be it just good in expectation, then this goodness of it can come at the expense of some other group, and if you help like one animal species, maybe it's carnivorous, and at the expense of the other species that they feed on, and the funder then sets the incentive. We're only going to retrofund stuff that like generates positive gains from moral trait across like all of these groups. And then if someone wants to realize such a project, they can either like realize the original version of the project and then not get retro funding very likely, or they can make like these mitigations that would like prevent the prey species from being harmed, and then make it more likely to receive retro funding. So these norms work without punishment.
You mentioned you want to implement shorting of impact certificates, if I understood correctly. What's the reason why you want to do this, or what effect you wish for?
Exactly the same one again. So this curation team, of course, at the moment is just like us, by and large. We will recruit some more people for that. And we first, when you publish an impact certificate, at first when you submit an impact certificate, it's hidden, and then we publish it, read through it, and then publish it if we think it's safe. But we can miss like stuff. So at first we would just want to reward people with like a constant bounty as a thank you for finding impact certificates that we agree should be removed. But that might not incentivize people sufficiently. Like if they just get like $100 bounty or something paid out, then some people may be interested in hunting for some bad impact certificates. But I imagine that like big hedge funds might not get interested in doing that for just $100. So in order to increase these incentives, we would like to create sort of buckets of impact certificates so that there's more volume, it becomes more realistic. And then people could take out short positions on these buckets and then publish their exposés about these impact certificates. And then when the curation team removes the impact certificate, the price will drop a lot. Everyone tries to sell out of it quickly because it's definitely not going to receive retro funds anymore. And then they can make like less bounded returns on their exposé. So that's the idea behind that.
Alright, I'm going to cut it there. Thank you for all those questions and answers, and for your talk.